going to be talking about some warnings from the International Monetary Fund.
Yes, and this is about growth. The IMF saying there's a 40% chance that the Eurozone could go back into recession for a third time. In its World Economic Outlook report, the fund cut its growth forecast for the 18 countries using the euro to 0.8% and sees growth of just 1.3% next year. Now, it added that the recovery globally was weak and uneven. The IMF has called on countries that can afford it to borrow to invest in infrastructure as a method of boosting growth.
Infrastructure investment, even if debt financed, may well be justified and can help demand in the short run and supply in the longer run. It may even be doable without an increase in the debt to GDP ratio.
Now, that story is moving the markets in Asia today as well. We've seen the Nikkei in Tokyo drop by over 1% in trading. In fact, it's just closed at that figure, just over 1% down on those fears about global growth. The IMF also saying that Japan should push ahead with another rise in its sales tax. Those news from the IMF also hitting trading in Hong Kong, which is down around 0.7%. Casino operators, in fact, in the gambling enclave of Macau amongst the biggest fallers there. The Shanghai Composite, though, back in business today after its week-long holiday. It's trading up around 0.5%.
All right, so warnings from the IMF about growth. Unemployment also a huge issue still here in Europe, isn't it? And there's going to be a meeting in Milan today to try and get some ideas about how to tackle it. Yeah, this was originally billed as a summit. It was since downgraded to a high-level conference on this, one of the most pressing issues for European leaders, particularly those countries in the Eurozone. Figures from August showed that more than 18 million people were out of work in the euro area and that youth unemployment is at around 25%. The French President and the German Chancellor among those attending, but there are no major announcements expected at this meeting. They're going to be made, or rather more expected to be made, before the EU-wide summit in December. OK, well, at the opposite end of the spectrum, really, millionaires, especially millionaires here in France, have some good news on the way for them. This is all to do with taxes. Yeah, France's controversial wealth tax set for the chop at the end of this year. The 75% levy on those earning over €1 million was only intended as a temporary measure, and the Prime Minister, Manuel Valls, has confirmed that it won't be extended. Shirley Sitman reports.
When François Hollande ran for president, he came with an unprecedented and controversial promise, taxing high salaries of more than €1 million per year at 75%. The so-called millionaire tax was difficult to put in place. Parliament voted the law, but its first version was censored by France's Constitutional Council. Months later, MPs voted a second version of the bill in which employers had to pay. The goal? Bringing the state extra cash temporarily for 2 years, which will soon be over.
This tax is an exception. I want to remind you, or give you a scoop. It will no longer exist after January the 1st, 2015.
In 2013, the tax generated €300 million. That's only 0.5% of France's overall income taxes. The French government said 470 businesses were meant to pay it, as well as about 1,000 people earning more than $1 million. Artists and football clubs hope to be exempted. Some threatened to strike if they were forced to chip in.
Last year, French football clubs lost about €40 million. This year, their results will be in the red again. One reason for that is the 75% tax.
While the tax will disappear, football clubs will still have to pay their stars immense salaries, which they have no intention of cutting down.
Let's take a quick look now at some of the day's business news, the other business stories rather. Air France says the 2-week strike by pilots could cost it up to €500 million. It expects pre-tax profits to now be more than 300 million lower than expected. The airline's traffic was down 16% in September as a result of the stoppage. The owner of KFC and Pizza Hut has cut its profit forecast for this year too after a food scare in China hit sales. Yum Foods saw sales fall by over 10% at outlets in China, which is a major market for the American company. The firm nonetheless reported profits of over $400 million for the quarter. And the world's largest retailer, Walmart, has stopped providing health insurance to some 28,000 part-time workers in the United States. The company says the decision was made on cost grounds. It's the latest firm to drop health cover for part-time workers in the US. As companies say they're paying more in the wake of reforms of the healthcare sector there.
Potentially a bit of a controversial story, that one. Let's just round off this business news update with some news about a senior official at the World Bank who isn't going to be getting his bonus. Why is that?
Yeah, well, it's because of an ongoing problem with the World Bank where they've been trying to cut costs dramatically. World Bank President Jim Kim says that the lender's chief financial officer now won't get his bonus of almost $95,000 this year. Bertrand Badret had joined the bank last year from the French bank Société Générale, and he's overseen much of that cost-cutting programme. His bonus was seen as particularly controversial among staff members who've had a whole range of complaints about the reorganisation of the World Bank. The news that Mr Badret was giving up his bonus was met by applause from staff at a meeting in Washington. Their annual meetings, of course, getting underway this week as well.
Is that money going to be redistributed among the rest of the employees, though? Where's it going to go?
They didn't specify, but presumably it goes into the overall pot of how much they spend in a year.
Or maybe into next year's pot, who knows? Thanks very much, Stephen Carroll, with an update on the business news.